Welcome to Demon Trades. I've decided to put together a couple of videos just to show people who are interested in day trading or are new to it some good ideas, hints and tips. All the videos are completely free. There's no subscription or any sign-up fees. And they're just really to give you a better basic knowledge of how to day trade or how to swing trade or position trade. There's some useful tools in these videos and it'll make you aware of what it's actually like to trade, what to look for and what to expect. There's also some very good tips in here, some very good trading strategies. And I've actually put all of the videos in the right order so that if you are completely new, before you get excited about starting to trade, you'll have all the relevant information so that you've got the right tools when you start to trade. Anyway, let's start with the first video. Types of traders. So you may have heard of different types of traders, but I'd like to put it down as three basic categories. The most famous one, if you like, would be day traders, I'd say, because they're the ones that you would imagine make the most money, have the most glamorous lifestyle. Then, of course, you've got swing traders, which are probably less aware. Swing traders are in between position traders or long-term traders, if you like the Warren Buffett and day traders. But they use a mixture of both strategies, if you like, and they still are very profitable, and we'll get talking about them in some more detail in a minute. Now you've got your position traders, which obviously, as I mentioned, are your long-term traders like your Warren Buffett. Okay, so let's have a look first at day traders. So what are the pros of being a day trader? Well, you are able to make profit every day. You can take that money out and you can spend it within a few days, times it's cleared from your account. So you've always got cash readily available. You've also got no risk of the stock price gapping up or down overnight, which would be advantageous and disadvantageous depending if you're going long or going short. Something else I'll get into later. What are the cons of being a day trader? Well, it can be, if you're very serious, a full-time job. It's very hard to do day trading alongside a full-time job in reality, unless you're able to free yourself from your work at least half an hour before the trading day starts to an hour and a half into the trading day as really a bare minimum to make it a full-time profitable job. That's definitely a con. You can't do it alongside a job unless you've got a desk job where your employer is happy for you to have that time doing your own thing, or you work for yourself and you want to try and make an extra bit of cash or learn about trading. But it's impossible otherwise to do it and be successful. This is a minor, but it's still important to be aware that obviously when you hold shares in a stock or a security, you do get shareholder benefits such as dividends. And that's something you're not going to get as a day trader. So it's important to be aware if you were thinking, oh, cool, I'm going to get some dividends for my investments. That's not going to happen. It also relies great knowledge of trading patterns, signals, and being able or having the ability to identify tradable stocks as a day trader. That's a very important thing to realize. You can't really trade every single stock for quite obvious reasons that I'll go into detail in other videos. That's something to remember. And also, you have to be very dedicated to do this. You have to be willing to learn, willing to accept when you're wrong, identify patterns, emerging patterns. You have to be on the button, you could say, very focused, and you have to act within seconds, to maximize your profits and to minimize your losses. Just as important to realize that it's not just about maximizing your profits, it's also about minimizing your losses. Anyway, that's a nice sort of brief overview of what it's like as a day trader. So swing traders, the one that is probably lesser known. Swing traders is someone who holds stocks for a few days, pretty much. So can be a few weeks, even sometimes a few months, but it's a lot less intense than day trading. You can log on for the last half an hour of the day's trading, or you can even do your research of an evening or in the morning and make your decision as to what your trade will be based on that. And then you can just leave it until it's hit its target, whatever you've expected or whatever you're happy with in terms of profit, before the rise or fall starts to tail off. So you could do it alongside a full-time job, anything from 2 hours a week to 5 hours a week of your personal time should be enough to be a profitable swing trader. Profits are still relatively fast. If you're good at it, if you've got a good winning strategy, you'll be able to make a considerable amount of money quickly. Of course, that's all depending on what your initial investment is, but if you're good at it, swing traders out there can still make a very handsome living off of not a very large investment. You don't need to have as great an understanding of stock signals. You don't need to be as sharp. You don't need to act within seconds. You act within days as a swing trader, really. If you were doing it full time and that was your strategy, you obviously would, work within 5 minutes or an hour. But it's definitely not as intense and as stressful and as demanding as day trading. And in certain circumstances, if you've held a stock for a long enough time during the dividend payout, you will get those benefits, which is, hey, for me, every penny counts, as it should do for you. And if there's an extra bonus to be had, it's great if you can take it. But it's not the be-all and end-all. It's not really why you're invested in a stock for the dividend payout, in my opinion. It's too small a gain to be worth considering. So what are the cons? You still need to have a strategy. You still need to understand what's the right stock to pick. You still need to have the right information, know where to get the information, a good information source. Another thing that is a con is you are locked into that share. Now, if there's horrendous news overnight that no one foresaw and you're locked into that share, you've got that risk of a big drop in share price or a big rise in share price if it's good news and you're shorting it. Those are the risks that you need to consider. So definitely, if I was a swing trader, I wouldn't put all my eggs in one basket, because one piece of bad news and you could kill half of your account, maybe even more. Profits are not as quick as day trading, but it's the same with losses. Losses are not as quick as day trading, so consider that, especially if you're a beginner. It also does trust or test your faith in a stock, because even the greatest stocks have bad days, and it's down to your resolve to not panic on one bad day, and probably not even on 2 bad days. Your faith is in the trend of that stock or that pattern that you've noticed, and you've got to hold firm. Whereas in day trading, the same thing happens, but because it's such a short period of time, once the drop was confirmed and it was no longer looking good to go up, you can get out and take your profit. Whereas you can actually lose a lot of money having that sort of setup with swing trading. So you have to believe in your system and only sell out your shares once that system's failed. Okay? So anyway, that's enough about swing traders. Let's get on to position traders. So what are the pros of being a position trader? Well, this here, I don't want to insult anyone, but it can, you don't really need any knowledge of trading patterns. It will consume a very small amount of your time. You'll do your research on the stocks that you like. You'll have a look at what they're offering in terms of products, how secure the company is in terms of finances, their expected earning ratios. You'll get the shareholder payouts. And you can just leave it to sit there for whatever period of time that you feel is enough until you need to take that money out for your retirement or to invest in a new, better stock that you've come across. So it is something that you can definitely do and just leave alone. It's the least stressful. It's the least problematic. So what are the cons? Well, you do need to have a good judgment on what is a profitable up-and-coming company or a good company to invest in. Some people have it, some people don't. Ask yourself, did you think Tesla was going to be as big as it was? Did you think Amazon was going to be as big as it was? Do you think Google was going to be as big as it was? If you sort of knew in your head, are all these companies that are now right at the top, yeah, I would have put money on them before. then you've instinctively got that character. But you can definitely learn skills. There's definitely skills out there, information out there that will help you to become a good position trader. But it's not as intense as swing trading or day trading. Also probably not as exciting. So those who have a slightly gamble mindset in them, you're not going to get that thrill. But you know, if you're a smart and sensible person, you like the look of a stock and you're happy seeing it rise 5, 10, 20% a year, then whilst it's in the background and your life's carrying on, then it's a good way to trade for you. Any other cons? Well, obviously market crash. Stock market crashes happen. You know, they've happened throughout history. They're going to happen in the future. And I do think it's important that you have a plan B for those situations. I know people have got big investments with brokers, and a lot of them had a good plan B for COVID. They still made losses, considerable losses, but they got out, they got into the mining industry, into resources, and they managed to save most of what they lost. So definitely, if you're putting all your eggs in one basket or all your eggs in a few baskets, have your plan B thought out for if there is a stock market crash, and as soon as you get wind of it, act. Do not wait, do not hesitate, act, okay? Even if the crash is not as bad as everyone expected it to be and you've lost 5%, trust me, it's a lot better than losing 50, 60, 75% of your investment. So that is the one thing I would say is if you don't have a plan B, you could get heavily burnt. Right, anyway, that is the end of this video. Please click the like button if you enjoyed it, and feel free to ask any questions. And that's enough from me. Thank you and goodbye.